we are kicking things off with massive market shifts. Samsung Electronics just shattered the $1 trillion valuation mark, becoming the second East Asian company ever to achieve this incredible milestone right alongside TSMC. This monumental surge has sent its stock soaring 12% in a single session. But the real story behind this trillion-dollar valuation is far more complex than just AI leadership. We dive deep into the memory shortage driving this massive profit surge, and what it truly means for the entire tech landscape.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the cutting edge of mobile technology. Samsung is finally rolling out the stable iteration of One UI 8.5, bringing some seriously game-changing Galaxy AI features to older devices. We're talking about call screening that can vet incoming calls for you, advanced photo editing with text prompts, and a system-wide audio eraser that cleans up background noise in real time across all your apps. Get ready to see how these new features are transforming your daily interaction with your Galaxy phone. Now, let's talk hardware deals. If you're looking to upgrade your gaming setup without breaking the bank, you need to see this deal. The Samsung 32-inch Odyssey G55C curved gaming monitor is currently on sale for a massive 30% off, dropping to just $230. This QHD monitor boasts a 165 Hz refresh rate and a lightning-fast 1 ms response time, promising incredibly smooth visuals and low latency for the most demanding games. But this deal won't last long, so stay tuned. And finally, we wrap up with the big picture on the chip race. Samsung has officially hit $1 trillion, and the stock is exploding as the AI chip race intensifies, with Apple reportedly exploring manufacturing partnerships with Samsung in the United States. We examine how Samsung's record earnings, fueled by HBM4 production, are reshaping the industry, and we look at the internal tensions, including looming labor disputes and the fierce competition with SK Hynix. Don't miss out on the full breakdown. Samsung Electronics has officially crossed the $1 trillion market capitalization threshold, becoming the second East Asian company to achieve this milestone, trailing only TSMC. The stock experienced a significant surge of 12% in a single trading session. However, this valuation is underpinned by complex factors beyond mere AI leadership, centering instead on the intense global memory shortage. Samsung reached this milestone following a robust first-quarter operating profit of 57.2 trillion won, $39 billion, significantly exceeding analyst consensus. While revenue growth projections were high, the underlying story lies in the memory sector. Samsung is the world's largest memory chip maker, and the AI infrastructure boom has created a severe shortage across the entire memory stack, impacting everything from advanced AI chips to conventional DRAM used in consumer electronics. The scarcity is the key driver. The shift from traditional boom-bust cycles to AI-driven capital expenditure has forced chip makers to prioritize high-margin AI memory, tightening supply for mainstream components. This is evidenced by dramatic price increases. For instance, a server-grade DDR5 DRAM variant saw a 314% year-on-year rise in Q4, and conventional DRAM contract prices were expected to increase further. Customer behavior is also evolving. Major AI infrastructure buyers are now securing multi-year supply agreements for high-bandwidth memory, HBM, rather than relying on quarterly negotiations. Samsung's leadership has actively pushed for these 3 to 5 year contracts to stabilize supply. This move suggests a fundamental shift in how memory is viewed, moving it closer to strategic infrastructure than a commodity. Despite the overall profit surge, Samsung lags in the most critical AI memory segment. SK Hynix currently holds 61% of the high-bandwidth memory market, compared to Samsung's 19% and Micron's 20%. While Samsung has made progress, its HBM share remains below 10% of its DRAM revenue in Q1. The company has recently begun shipping HBM4 chips, securing a foundry partnership with NVIDIA, signaling momentum. This supply diversion creates cost pressures downstream. As Samsung and competitors focus on AI memory, the supply of conventional DRAM for phones and PCs is tightening, leading to acknowledged cost increases from device manufacturers like Apple. Samsung is absorbing these pressures. Its chip division benefits from elevated pricing, while its mobile division, the world's second-largest smartphone business, faces profit slippage. Looking ahead, leadership signals caution. While viewing the current environment as an unprecedented supercycle, co-CEO Jun Younghayan has flagged concerns about overheating in AI infrastructure investment. Early signs suggest the cycle may be maturing, with spot DRAM prices easing as end-user demand struggles to keep pace. Long-term risks include geopolitical factors in memory manufacturing and the sustainability of multi-year capital expenditure commitments. Ultimately, the $1 trillion valuation reflects Samsung's successful navigation of an extraordinary tailwind from the AI boom by capitalizing on scarcity pricing across its entire product range, even as it works to close the gap in its most strategically important memory category. The sustainability of this valuation hinges on converting HBM progress into durable gains against competitors and whether the underlying pricing cycle can persist. Samsung has officially launched the first stable iteration of One UI 8.5, rolling out to older Samsung devices and bringing many flagship features previously exclusive to the Galaxy S26 series. The update, which began in Korea on May 6, 2026, is set to deploy across other regions throughout May. The update focuses heavily on enhancing Galaxy AI capabilities, introducing new functions, and improving existing ones, alongside adding cross-platform quick share functionality between Android and Apple devices. Key features rolling out with One UI 8.5 include significant upgrades to Galaxy AI tools. Call screening is now available on the Galaxy S25 and older models, allowing users to have the AI screen incoming calls, identify suspicious numbers, and even handle calls automatically by asking the caller for verification. This significantly enhances the previous Bixby text call feature. Photo editing tools have also seen major enhancements. The improved Photo Assist now allows users to input text prompts to guide generative AI, enabling them to achieve precise edits in photos, moving beyond simple object selection and resizing. Additionally, Audio Eraser, which previously only worked in Gallery for video recordings, is now system-wide and real-time. This AI feature isolates and removes background noise from audio in real time across streaming apps and recording functions, and it now works during the recording process itself. Cross-device file sharing has been streamlined with the integration of QuickShare, which now supports seamless file transfers between Android phones and Apple devices like iPhones and Macs, resolving long-standing compatibility issues with AirDrop. This feature will be deployed on the Galaxy S25, S24, S23, and S22 series devices. Furthermore, proactive AI assistance has been boosted by new features like Now Nudge. This new capability analyzes user context, such as notifications and messages, to offer unprompted suggestions. For instance, automatically adding meeting notifications to a calendar or locating requested pictures based on text messages. These major updates signal a significant push toward integrating advanced AI functionality across the entire Samsung device ecosystem. Samsung has dropped the price on its 32-inch Odyssey G55C curved gaming monitor to a 30-day low on Amazon, marking a significant clearance opportunity for gamers. Originally priced at $330, the monitor is currently available for $230, representing a substantial 30% discount. This deal is positioned as a timely opportunity for users looking to upgrade their gaming setup affordably, though sources caution that such clearance deals are often temporary. The monitor boasts QHD visuals, offering significantly more pixel density than standard HD screens, which is designed to maximize the performance of high-end graphics cards. The 32-inch curved display enhances immersion, enveloping the user in the game world. While it is not a 4K resolution, the QHD clarity is emphasized for performance-focused gaming. Performance specifications are key to the monitor's appeal. It features a 1 ms response time, ensuring minimal input latency crucial for fast-paced gameplay, coupled with a 165 Hz refresh rate for smooth visuals and high frame rates. Further enhancing the experience, the monitor supports AMD Radeon FreeSync technology for seamless synchronization with the graphics card. Ergonomics are also highlighted as a positive feature for user comfort. Kotaku advises potential buyers to act quickly, as this deep discount is unlikely to last long. Those interested in securing the monitor at the $230 price point should proceed promptly to Amazon to avoid missing out on this limited-time deal. Samsung Electronics has achieved a monumental market capitalization of $1 trillion, positioning the South Korean chip giant as the second-largest firm in Asia to reach this valuation milestone. Trailing only Taiwan Semiconductor Manufacturing, the announcement triggered a significant surge in Samsung's stock, which jumped over 15% in Seoul trading, setting the stage for one of the largest single-day advances in the company's history. This rally was fueled by intensifying competition and massive demand within the artificial intelligence chip race. Crucially, the valuation milestone coincides with strategic developments aimed at reshaping Samsung's future revenue streams. Reports indicate that Apple is engaged in exploratory discussions with Samsung regarding the potential manufacturing of processors for its devices in the United States. Furthermore, Intel has also been named in these talks, offering Apple a secondary production option beyond its established relationship with TSMC. The broader market reacted strongly to Samsung's performance. The rally propelled the Kospi benchmark past the 7,000 level, a new high for the index, with SK Hynix, Samsung's memory counterpart, also surging over 10%. Together, these two firms account for more than 43% of the index's weighting. Financial results for the first quarter demonstrated explosive growth. Samsung reported an operating profit of 57.2 trillion won, $39.2 billion, representing a more than eightfold increase year-over-year. Revenue hit a record 133.9 trillion won, $91.8 billion, with a single quarter's profit surpassing the entire 2025 total. This surge is directly attributed to high-bandwidth memory, HBM, chips, specialized components vital for AI data centers. Samsung confirmed the mass production of HBM4, the sixth generation of the technology expected to power NVIDIA's forthcoming Vera Rubin AI architecture. While SK Hynix holds an estimated 55% of the HBM market, Samsung's 25% share is narrowing due to positive customer reception of its HBM4 products, alongside improving margins on standard DRAM. Investor confidence is also bolstering the stock. A new partnership between Samsung Securities and Interactive Brokers is facilitating easier access for American investors into South Korean equities, leading to a near-record inflow of 2.9 trillion won, $2 billion, into Kospi shares on Monday alone. Analysts remain overwhelmingly bullish, projecting an additional 22% gain for Samsung over the next year. However, internal tensions are mounting. Workers in the chip division are demanding a larger share of the AI-driven windfall and have threatened an 18-day strike scheduled for May, despite the strong performance in the chip sector contrasting with weaker margins in the mobile and display units due to rising input costs.